Good morning, everyone. Looking at the US stock markets, it continues to trend higher following the breakout pullback and continuation pattern above the 22,250 points. Since then, the Dow continues to trend higher towards the 23,000 psychological level and subsequently towards the closing at a new all-time high level of 23,539 points on last Friday. So moving forward, we're expecting the Dow to continue to ascend higher towards its next resistance towards the 23,750 points. That will be the next resistance for the Dow Jones Index. In the meantime, any pullback for now will be a healthy one towards the 23,250 points or even towards the 23,000 level before the next up run will resume. Gains on last Friday were mainly stemmed by the stronger than expected corporate earnings by Apple, and they have also guided that the upcoming quarter will be a positive one as well. So Apple, which gained about 2.6% on last Friday, has anchored the gains on the Dow Jones Index. Similarly, on the S&P 500, we did see the breakout pullback and continuation pattern above the 2490 level. Since then, the S&P 500 has hit some of the resistance along the 2580, but after mild pullback just towards the EMA 20 or the 2550 level, we did see the S&P 500 has resumed its uptrend and subsequently closing at the new all-time high level as well on last Friday at the 2580 level. So moving forward, we're expecting the S&P 500 to continue to trend higher towards its next resistance, which is located towards the 2600 psychological level. In the meantime, any pullback for now on the S&P 500 will be a healthy one towards the 2550 or even towards the 2540 level before the next up run to resume. Okay, some of this on the crude prices. It did see the breakout pullback and continuation pattern above the $49 per barrel level. Since then, the crude prices has hit some of the resistance along the 52 and subsequently made a very strong breakout above the 52 towards the recent peak of around the $55 per barrel mark. The 55 was also the immediate resistance for the crude prices. If the crude prices were to hold above the 55, then we might see further upside towards the 60 or even towards the $63 per barrel level. In the meantime, any pullback for now will be a healthy one for the crude prices towards the 53 or even towards the 52 towards the $53 per barrel level before the next up run to resume. Gains over the past like 2 to 3 weeks trading period is mainly came from the support from Iraq, Saudi Arabia, and also Russia in extending its production cut. So moving forward, if more OPEC countries were to support the production cut stance, then we might see the market for the global oil demand and supply to rebalance quicker than expected. Okay, some updates on our local front. The FMKLCI has pulled back towards the near the 1730 level. Since then, it has staged just a mild recovery just towards the EMA 20. It rejected the EMA 20 or the 1750 level, and once again, we did see some of the selling pressure on the FMKLCI. So moving forward, we're expecting the key index to continue to drift lower towards the 1730 level before the next up run to see how it holds at the 1730 level. If the 1730 level cannot hold on the FMKLCI, then further the downside will be seen towards the 1700 psychological level. In the meantime, any gains from the FMKLCI will be just kept towards the 1750 towards the 1760 level on the FMKLCI. So on the short term wise, we are seeing the FMKLCI is forming some of the lower high and also the lower low formation, implying that the weakness is currently intact on the FMKLCI. On the FM small cap wise, the FM small cap has recovered above the 17,370 level. Since then, it has maintained its sideways position over the past 1 week trading period above the EMA 9 level. So moving forward, we will continue to monitor for this 17,000 17,370. If the 17,370 level could not hold, then we might see further pullback or further consolidation phase on the small cap back towards the 17,100 points. If the 17,370 points were to hold over the next couple of days, then we might see further recovery towards the 17,550 points. Some of the stocks that we can watch out for, one of it will be Lion Industry. Lion Industry has seen some of the resistance along this 148 cents level. Since then, price has pulled back just towards the EMA 20 level and formed a very good symmetrical triangle formation breakout on last Friday itself above the 1 ringgit 38 cents, accompanied by some of the improvement in volumes following the breakout. So following this breakout of 1 ringgit 38 cents level, we might see further upside for Lion Industry to retest its previous peak of 1 ringgit 49 cents, sorry, 1 ringgit 48 cents, and subsequently towards the 1 ringgit 60 cents level, with your stop loss point being located at the recent low, which is currently located at the 1 ringgit 31 cents for Lion Industry. If there's a further, if we could see further buying interest follow on last Friday, then we could also anticipate for the MACD line to give us a buy signal, whereas the RSI is already retesting the 50 level. Another stock that we can watch out for will be MESB. MESB again saw the first wave of rally. Price pulled back just towards the EMA 20 level and staged a sideways pattern. Once again, it's rallied for the second wave just towards the 1 ringgit 37 cents level. And once again, it pulled back just towards the EMA 20 level and traded sideways. But on last Friday, we did see a short-term breakout on MESB. I can say that this is a T+4 formation breakout. This was a T day on the 30th of October. Price pullback for past 3 trading days without significant volumes. Last Friday, we did see the breakout happens. So moving forward for MESB, we need to monitor for this short-term consolidation breakout above the 1 ringgit 18 cents. Upon the breakout of 1 ringgit 18 cents, further upside will be seen towards the 1 ringgit and 28 cents level, towards the 1 ringgit 37 cents level. Your stop loss point will be located below the 1 ringgit 11 cents for MESB. For Sunway Construction, price has hit some of the resistance along the 2 ringgit 43 cents all-time high level. Since then, price has pulled back just towards the near the EMA 60 or 2 ringgit 25 cents level. And on last Friday, we did see a short-term breakout above the 2 ringgit 33 cents level, accompanied by some of the mild improvement in volumes. Following this 2 ringgit 33 cents breakout, we could see further upside for Sunway Construction to trend towards the 243 or even towards the 2 ringgit and 60 cents level for Sunway Construction. Your stop loss will be located below the 2 ringgit 25 cents for Suncon. Everything is turning quite positive right now. As you can see that following the breakout above the 2 ringgit 33 cents level, we did see the MACD indicator has issued a buy signal, whereas the RSI is above the 50 level as well. For EcoWorld, price has formed some of the recovery on top of the 1 ringgit 50 cents level, forming the double bottom formation. Then he formed some of the hammer candle on top of the 1 ringgit 50 cents. Once again, another hammer on top of the 1 ringgit 50 cents level, and he did see a good breakout above the 1 ringgit 54 cents level. Following this breakout above the 1 ringgit 54 cents, we did see EcoWorld has continues to maintain its sideways position. So for EcoWorld, we need to monitor for the breakout above the 1 ringgit 57 cents for us to target the 1 ringgit and 64 cents, or even towards the 1 ringgit 68 cents level. Your stop loss point is below the 1 ringgit 54 cents for EcoWorld. Indicators has also been slowly trading higher. You can see that the MACD indicator has already slowly been creeping higher, has already turned green on last Friday, whereas the RSI continues to maintain its stance above the 50 level as well. So another company that we can watch out for will be Malayan United Industry, MUI Industry. MUI Industry has again formed a very strong bullish candle, hitting the recent intraday high of 24 cents level. After touching the 24 cents, we did see a healthy pullback over the past 3 trading days without significant volumes during the pullback phase. It recovered on top of the EMA 9 level on last Friday itself. So this could be the potential flat formation or T+4 formation breakout for MUI that we're going to monitor for the 21 cents. If the 21 cents were to be breached for today, then this could be a T+4 formation for us to trade to an intraday target of 24 cents or even towards the 6 cents level. Your stop loss point is below the 20 cents for MUI. Everything is quite positive on MUI right now. You can see that the MACD indicator has already turned green, whereas the RSI continues to maintain above the 50 level as well. So the uptrend intact orientation was also established following this bullish candle. The MA9, 20, 60, and 120 has been in line. For SCH, price has again hit some of the resistance along the 24.5 cents level. Since then, price has pulled back just towards the 21.5 cents. After touching just the 21.5 cents, we did see the SCH has formed a good bullish engulfing candle and subsequently break above the 22.5 cents level. So this could be the breakout, pullback, and the continuation pattern for SCH towards the 24.5 cents. And upon a breakout of 24.5 cents, further upside will be seen towards the 26.5 cents level. Your stop loss point is below the 21.5 cents for SCH. Last company for today will be PA. PA has again hit some of the resistance along the 70 cents level. Since then, price has pulled back just towards the 62 cents. After touching the 62 cents, price traded on a sideways trend and subsequently made a good breakout on last Friday above the 64.5 cents level, accompanied by some of the improvement in volumes being traded over the past 5 trading period. Following the breakout of 64.5 cents, any pullback for now towards the 64.5 cents will be a healthy one for us to accumulate before the next uprun will resume towards the 70 cents or even towards the 73 cents level. Your stop loss point is below the 62 cents for TA. If you have any questions, you can put in the chat box and I'll reply you shortly. If there's no question for today, then we'll end the morning briefing. Thank you.